Good morning, everyone. Good afternoon, depending where you are. Like I said on Thursday when I spoke with GH, I said euro dollar usually go higher for last 20 years on Thanksgiving days. And let's play it and so you can remember what we said. Let's watch it the next few days and see if the euro dollar is going to shoot up a couple hundred points. So if you remember, I'm giving you idea. For last 20 years, usually the euro dollar go higher on Thursday.
Well, you know what, Joe? I'm gonna put a cheeky little trade on and just set it and then just leave it to see what happens. And then put a stop loss under 122.
So you can see 112.00. We have a big option on Thursday, and we never traded below this line. And on Friday, when U.S. holiday after Thanksgiving, the euro dollar went up about 125 pips. All right, so now, and I said also last time on Friday, when you see the Japanese yen green and everything is red, this is mean big problem on the market, and that's why you see big sell-off on Friday, because the Japanese yen, it was green and everything else was red. Today is little different. You can see everything green and Japanese yen, it's red. So what's happening, you can see starting little rally. The market start rally. Everything start rally here. Bitcoin start rally, everything. So the risk is off. Okay. So when the Japanese yen go green and everything go red, risk on, now the risk is off. Okay. So this is to give you idea what is the market is the people taking a lot of risk or no risk on the market. When the Japanese yen is green, this means a lot of risk on the market and everything go down. And when you see the Japanese yen is red and everything else green, this means the market feeling good about everything and everything start going higher. This is just very important to keep this your eye on the screen all the time. Okay. Now, also, usually we do our target for the gold trade on gold account. We did our target 15,000. Now we are 16,000 for the month, which is good. And the Forex account, when we do a trade, we did about 26,000 this month. Now, if you see the whole history, you can see we put like a few years ago 10,000. Now it's about 327,000 for 2 years. So if you want to trade live account and take every trade we do, you feel free to join our chat room and you can take the trade with us and follow our analysis. And everything is very important in this screen. It tells you to time the market, which trade we going in and out, and to help us for the day trading. When we do day trading, this screen help us very much. All right, so I will read some news and I will post some trade. If I see anything, I will let you know in the chat room.
all bad. The loss is not as deep as perhaps expected. So making up for some of that lost ground we did see on Friday. But if we look at the sectors, as expected is the tourism stocks that are under a significant amount of pressure today. Actually, the underperformer when it comes to those sectors right now sitting down around 3% lower after that 1.6% drop we did see on Friday. So that is an extension of those losses, certainly as China is reporting new infections, 41 new cases yesterday, up from 23 the day before, 21 of which are locally transmitted. So, as I say, tourism stocks under pressure today, as we do know that just a handful of cases in Shanghai, for instance, last week did, prompt some travel restrictions, which really did dent sentiment. But elsewhere, we are seeing the energy stocks are under pressure today. But if you take a look at the index that tracks those healthcare stocks, that's actually one of the outperformers today, a real bright spot sitting up around 1% higher at the moment, as that does come off the back of these developments around what these vaccine makers are saying in response to the Omicron new variant. We're also seeing reports CanSino has started research and development for the new variant as well. So certainly a lot of excitement around that, because if you look at those A shares of CanSino up 10% right now, as are those H shares. But away from all of that and the COVID situation, investors also reacting to the latest industrial profit data out of the mainland just over the weekend, which accelerated once again in October as well as in September, jumping 24.6% from a year ago compared to that 16.3% we saw the month before. And authorities have certainly said that it is down to certainly keeping a lid on those prices when it comes to those raw materials.
Let's talk more about the outlook for the region. Sam, thank you so much for that. Arthur Lau, co-head of emerging markets, fixed income, and head of Asia ex-Japan, fixed income at PineBridge Investment, joining us from Hong Kong. Arthur, good to have you with us. We're all trying to come to grips with this, this new variant, Omicron. Does it somehow derail growth prospects from where you sit? Are you reassessing any growth projections?
I think at the moment it's quite too early to say that it's going to be a significant implication to the economic growth. But we think that the near-term volatility will certainly be elevated given the uncertainty, and potentially some economies will go back to the lockdown mode. I think that will certainly will worsen the economic recovery and the growth trajectory. I think the more concern I have is whether the global logistic issue is going to be further delayed in terms of the reopening and easing of this global bottleneck. I think that certainly will result in high inflationary pressure in the near to medium term if this new variant proved to be more deadly.
It's interesting because when you talk about inflation, that is going to be a key. I mean, how vulnerable might that be, given the inflation outlook that you just pointed out to? How vulnerable will that put the bond market under?
Okay, I think two things here. First of all, like if the inflation pressure, especially in the U.S., continue to accelerate, we already see that the tapering probably will speed up, and potentially the lift off will be earlier. So that will have a negative implication to the fixed income market in general. In Asia in particular, I think I see some vulnerability in some selective Asian countries, given the outflow and given the domestic inflation pressure. For example, India is the only ASEAN countries that we observe have higher inflationary risk at the moment compared to other ASEAN countries. So if the global inflation continues to edge up, the inflation pressure filter through in Asia certainly will increase the risk here, which will lead to FX volatility as well as the outflow from Asia.
So what's your outlook for the Asian credit market then? What are you advising investors to do?
I think there are a number of things in terms of Asia fixed income. In terms of rates and FX, I think we need to be careful in terms of which country or in terms of local market that we want to go to. As I mentioned, like Indian certainly has some risk. At the same time, we think the Indian rupee and the Philippine pesos probably will have a negative implication if there is an inflationary concern. For the credit market, however, we think that there will be some positive supporting factor because next year we expect the supply will be quite moderate or likely to be flat. In terms of the high yield space, of course, like the Chinese property sector continue to be the focus of the attention, but we think the supply risk will be much lower in the next year. So credit selection in the high yield space continue to be the critical winning factor, I believe.
Everybody's starting to look at when the Fed is likely to hike rates. Is there something on your radar as well?
Yes, I think of course, we need to distinguish between the tapering and the rate hike decision. They should be separate. As I mentioned earlier, the tapering probably will be faster. And the lift off will be likely earlier if the inflationary data, the risk continue to be elevated. So I think at the moment, we think the lift off will be likely in the latter part of next year, unless the data proves otherwise.
Do you think governments still have the stimulus and the spending power to cope with any downside risk to Omicron? I'm just worried, and a lot of concerns in the market that, spending and sort of ammunition that governments have are running a bit thin right now.
Yes, you are quite right. Given the 2 years COVID-19 now, I think many governments' financial position has been deteriorated, to say the very least. Some actually is deteriorate to a point that there may be potential default or restructuring. So I guess the monetary side or physical side will have some limitation. So that is the reason why I said it's too early to say that the new variant will be a sort of extremely disruptive. We have to wait to see more data, but hopefully our base case is that's still manageable. So the recovery should still going back on track, and the government will not need to do much if the recovery remains.
Okay, the quick one from me, US speeding up tapering, what you talked about, which currencies or which markets are going to be most vulnerable to these rate risks?
I think in terms of Asia, as I mentioned, I think the Indian rupee will be at risk. Indonesia rupee also, Philippine peso. I think these three currencies probably likely to be, in my view, will need to be underway.
All right, Arthur, we'll leave it there. Thank you so much for your time. Good talking to you. Arthur Lau of Pinebridge Investments. Coming up next, much more ahead this hour of Street Science. We'll continue to monitor the Asian trading session in the shadow of Omicron. And later, we speak to Vin Gupta from the Institute of Health Metrics and Evaluation about what we know about the risk of Omicron so far. That interview coming up at the bottom of the hour. Keep it right here on Street Science. We're back in 2.
Okay, on Friday we said we looking to short around this line because the market was down big. Like we went from 16,400 to 16,000, and I said let's watch if the market rally to this level. 1, 2, 3, we can short right here or here and here. And you can see when the market rally, we took the short here and we make good money. Now, can I take the short again here? Let's watch and see. If we cannot rally above this line, this means the market is still on sell mode, and I'll maybe take the sell here or here for US market. But right now the market is strong because everything is green against the yen, so it's not good idea to take a short right now. You do this if the Japanese yen was green and everything was red, so you can do that. But let's wait and see if the market is feeling good about the new coronavirus in South Africa, because like I said on Thursday and Friday, usually when the people see any news about the COVID, they usually sell, and they said, okay, let's sell and see what happened. We analyze the news. If it's very bad or not bad. So what happened on Thursday, everybody start selling off on Friday. Everybody pushed the sell bottom, and he said, let's cash and wait and see. So right now, Europe, some country closed, like Germany, Belgium, Australia. So China, they have a new COVID case, like 51 cases, the new one. So we're not sure how is this gonna play. So I'm watching this level and this level and see if we break. So this means the market sink is not big deal. And if we cannot go above this line, this means the market is more trouble and he's gonna sell off. So let's watch it closely in next few hours. And also I wanna tell you, we have open trade on OCCAD. It's up 83 pips, so I'm closing the position right now, because we took OCCAD on Friday and we are up 83 pips. So if I see anything, I'll let you know. I will keep you update on the chat room.
Rio Tinto up by 1%, BHP Fortescue also doing well. We saw at the start of the session our Australian oil plays, the LNG majors, getting absolutely walloped. They were down by around about 5%, but right now, following on from that little bit of an uplift in the crude contracts, even though, you should be looking at the North Asian LNG futures perhaps, but you've got Woodside only off by around about 0.75%. You've got Santos down by 0.5%. So we are perhaps seeing a little bit, and I suppose in that first hour of trading, Chrissy, a lot of people were probably making a lot of money buying on that considerable dip that we did see, but we are seeing them tracking higher at the same time. What's interesting when you do look at the commodities space as well is that you haven't really seen gold catching any kind of a bid, even with all of the risk-off sentiment that we did see, because it still just hasn't managed to yet again knock on the door of that 1,800 an ounce. So that's going to be something worth tracking if we do see any kind of worsening in the COVID-19 situation as well. Obviously, it's been depressed of late. We've got a little bit of positivity for some of our gold miners today, but it doesn't correlate in that sense, Christine, that you would expect, much like we did see in the first big COVID drop-off. Gold is actually popping up over that $2,000 an ounce mark, but it just isn't finding any kind of support right now. And that's what you'd be thinking of when you have that kind of risk-off environment. People would be fleeing into it, and they're just not.
It's interesting. It's quite right. You mentioned gold really not, getting a lift from all this nervousness in the market right now. Will be interesting to watch. We'll be keeping a look on the gold price. Will, thank you so much for that. Coming up next, shares of Didi tumbling on Wall Street following reports it has been asked to delist by Chinese regulators. We discuss what this means for the stock and the firm's next move when Street Science comes back.
So let's wait and see if this level is going to hold or not, and we make a decision in next hour or two about anything, because right now we have a mixed signal. In the big trend, we are down, and in short-term trend, we are up. So this is what is confused a little bit. If the market is going to continue going higher, or is this just a rally and we're just going to sell off again? So like you can see, we have a mixed signal: green and red, 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 green and red. So when we see something like that, this means it's confusing. The only thing it's red, it's euro yen. Okay, so maybe we'll focus on euro yen in next couple minutes. If we stay above 128.36, I'm looking for short. And if we start trading above 128.36 the higher, I'll maybe wait. But right now, as long as we stay under 128.36, this line here, I'm looking for short. Okay, and any rally, I'm looking to sell. All right. So that's it for Asian session today, and I will talk to you on London.
Welcome back to Street Science. Turning our focus to Japan right now. Nikkei 225 holding some ground there, as you can see, recovering from earlier losses. Trading to the upside, up 7 points, 28,758. Dollar yen sitting around 113.64. Worries over DiDi's potential delisting in the U.S. hurting sentiment on SoftBank, as its Vision Fund owns about 20% of the Chinese ride-hailing giant. SoftBank now recovering a little bit of ground there, up 11%. SoftBank shares trading at 63.43. DiDi shares also tumbling on the report, dropping nearly 3% on Friday. Right now, still lower, 2.8, 7.8. Chinese regulators reportedly asking the firm to delist due to concerns about the leakage of sensitive data. DiDi shares has lost almost half of its value since its listing earlier this year. To talk more about this, Mio Kato is the founder of Lightstream Research, joining us from Tokyo. Mio, good to have you with us. It's interesting because details are emerging that China's asking DiDi to delist, but DiDi so far has yet to confirm the rumor. What exactly is going on? The big question is DiDi trying to manage its strategy from behind the scenes to manage the fallout? What are its possible delisting options they're considering?
Morning, Christine. Yes, so we agree the situation is extremely complicated and quite interesting. So what we believe is that there are two major options that the company could be considering, assuming the leaks are true. The first would be a rather quick delisting in the US, followed by relisting in Hong Kong. The other option would be to actually wait to actually perform a secondary listing in Hong Kong, and then perhaps delist the US ADRs after that. What makes the situation kind of complex is that DiDi was planning to have its Chinese app reinstated by the end of the year. Currently, existing users can use it, but you can't download the app newly. So if it needs to get this done quickly, then the question is whether the Chinese government would be tying the reinstatement of the app to its actual US delisting because of the sensitive data issue that you mentioned. If so, there might be more pressure on DiDi to actually delist the shares more quickly, in which case the former option, delisting first and then relisting in Hong Kong, could actually be the selected option. So what we think is interesting here is that given the lawsuits that are already existing in terms of DiDi's lack of disclosure on regulatory issues when it listed, and the fact that the stock price is now down significantly from the $14 IPO price, it's possible that if it does delist in the US, it might have to offer investors a much higher price than the current share price. So we're not sure if the negative stock market reaction was actually warranted, given that there are challenges to the fundamental picture of the company. But given this potential technical hurdle, if DiDi, for example, is going to privatize at, say, $14 a share, that would represent something like 70% upside from the current share price. So it's not a certain thing, but we think that investors should really be thinking about that possibility and gauging whether the reinstatement of the app will indeed be linked to the delisting in the US. Because if so, investors should probably be positive on the stock rather than negative, in our view.
Okay, so it's rather complicated, as you alluded to. Let's just say if it was to relist again or list in the Hong Kong market, what would investor appetite be given all this negative news surrounding the stock already?
That's a good question. We suspect it would probably be quite weak. There are a few psychological issues, simply that the initial listing was obviously a failure. And so any investor who sort of gets a second chance on that might want to actually stay away. There's the other factor that even though liquidity in Hong Kong is relatively good, it really can't be compared to the US. So in terms of the dollar volume interested in investing in DD, it might be significantly lower. And you have other wrinkles such as the recent Omicron virus, as well as some of the struggles China seems to be having in terms of locking down the COVID virus internally. And that could have a negative impact on sentiment for DD as well. And given that there are other various tech options, it's not necessarily so that investors would really feel that they need to own DD. So we think a relisting might be a bit weak.
Okay, so the fallout, I'm looking at SoftBank shares, recovering a little bit from the last session. So the fallout on SoftBank, which holds a 20% stake in DD, seems to be a little bit more muted. I know you cover SoftBank as well. Is this a big setback for the company's strategy in any way?
In direct terms, we don't think so. Even though SoftBank owns a relatively large share of DD, in terms of the contribution to SoftBank's overall value, it's moderate to small. We think the bigger impact is actually from the broader sort of sentiment or concerns that this might raise in terms of Chinese regulatory risks, given that it's not DD, but it's become a much more broad and lasting pattern than perhaps some investors were initially expecting. What it does is cast a lot of doubt on the valuations of a lot of SoftBank's Chinese assets. And the other aspect is simply that the data issues and some of the, for example, the data tax that has been rumored to be implemented in China, they highlight a lot of the potential risks to tech globally, given that these issues are rather global and not just Chinese.
Sure. Okay. We'll leave there. Thank you so much, Mio. Thank you so much for your time weighing in on this very interesting topic. Mio Kato there, talking to us from Highstream. Coming up next, we get more on the Asian trading session as the world watches the market response to potential Omicron concerns. Street Science back in 2 minutes with much, much more. You're watching Street Science. The world is watching Asian markets as the trading week gets underway in the wake of global fears over Omicron variant. Right now, all trading to the downside. As you can see, weakness across the board. Some of these markets struggling to stay above water. Hang Seng was trading in the green, but now back in the red. U.S. futures is trading like this as well. A slight turn, as you can see, given the steep fall we saw on Friday. Dow Jones upside 257 points higher, implied open. Nasdaq 212. And here's what we know about Omicron so far. The latest COVID-19 variant has been detected in more economies, including Hong Kong, Australia, and Canada. Japan's Prime Minister Fumio Kishida saying that his government is considering tighter border controls after shutting its borders to travelers from South Africa. Meanwhile, the UK has called for an emergency G7 health ministers meeting later today to discuss ways to contain the new variant. But South Africa's President Cyril Ramaphosa condemning the decision to isolate his country, saying that the rapid spread of Omicron is partly caused by vaccine inequality.
The emergence of the Omicron variant should be a wake-up call to the world that vaccine inequality cannot be allowed to continue. Until everyone is vaccinated, everyone will continue to be at risk.
Meanwhile, America's top infectious disease expert, Dr. Anthony Fauci, commended the quick action by South Africa, but explained why flight bans are necessary to stop the virus in an interview on NBC's Meet the Press earlier.
This is a clarion call, as far as I'm concerned, of saying, let's put aside all of these differences that we have and say, if you're not vaccinated, get vaccinated. If you're fully vaccinated, get boosted and get the children vaccinated also. We now have time. Thank goodness that the South Africans are really extraordinarily good in what they did. They were completely transparent right from the beginning. We were on the phone getting real-time information for them. On Friday, we're going to be talking to them again today. So we have an advantage of this. We have an up on it. We know what's going on. We're getting more information in real time. When you diminish or stop or block travel from a particular country, there's a reason for that. It's to give you time to do things. So don't let this decision that was made about blocking the travel from certain countries go without a positive effect. And the positive effect is to get us better prepared, to rev up on the vaccination, to be really ready for something that may not actually be a big deal, but we want to make sure that we're prepared for the worst, and that's what we should be doing.
Okay, what is it about this variant that you've seen so far that has everybody so alarmed that the other variants that we've had in between Delta and this one, Delta alarmed folks, this one alarmed folks, Lambda and Mu, for instance, haven't. What makes Omicron so concerning to you?
Yeah. Well, right now what we have is we have the window into the mutations that are in this new variant. And they are troublesome in the fact that there are about 32 or more variants in that very important spike protein of the virus, which is the business end of the virus. And there's about 10 or more of these mutations that are on that part of the virus. We call it the receptor binding domain that actually binds to the cells in your nasopharynx and in your lung. In other words, the profile of the mutation strongly suggests that it's going to have an advantage in transmissibility and that it might evade immune protection that you would get, for example, from a monoclonal antibody or from the convalescent serum after a person's been infected, and possibly even against some of the vaccine-induced antibodies. So it's not necessarily that that's going to happen, but it's a strong indication that we really need to be prepared for that. That, together with the fact that it just kind of exploded in the sense that when you look in South Africa, you were having a low level of infection, and then all of a sudden there was this big spike. And when the South Africans looked at it, they said, oh my goodness, this is a different virus than we've been dealing with. Yeah. So it clearly is giving indication that it has the capability of transmitting rapidly. That's the thing that's causing us now to be concerned, but also to put the pressure on ourselves now to do something about our preparation for this.
What is it about, what do you need to know to find out if our vaccines are working correctly, or if they need to be tweaked, or if the boosters need to be tweaked? We never tweaked the boosters for Delta. Do you expect us to do that for this one?
So the critical questions now are, do the antibodies block this well? And what is the seriousness of the disease? So there are enough people right now in South Africa that our South African colleagues are following to determine, is this highly transmissible but doesn't really give a severe disease? Or does it really give the same kind of severity that we've seen with Delta and other variants? All of these are gaps in our knowledge that we are all over and going to find them out pretty quickly.
Well, the Forex market's digesting all this bit of news about Omicron as well. Dollar index recovering a little bit. It was dipped to a one-week low of 95.973 on Friday. Right now, recovering just a little bit there. Safe haven yen, 113, clawing back. It was scurrying into the safe haven, but now is losing a little bit of ground against the dollar, trading at 113.69. The Chinese yuan, meanwhile, is trading like this, offshore 6.3854, but a lot of volatility, as you can see, a lot of movement there when it comes to currencies. Let's talk more about the outlook. Zach Pandal is co-head of Global FX Rates and EM Strategy at Goldman Sachs, joining us from New York. Good to have you with us. I'm just wondering, when you look at Omicron, Zach, everybody's starting to figure out what the risks are going to be. But when it comes to the dollar, when you look at the structural vulnerabilities of the greenback, what does it mean? How much more downside is there for the currency?
So I do think that, as you heard from Dr. Fauci, there's a lot of uncertainty here, but the Omicron outbreak does introduce more upside risks to the broad dollar for a few reasons. First, the dollar is a kind of barometer for the global economy, so weakness in the global economy tends to support the dollar. Second, the U.S. economy seems to be less virus sensitive than economies in Europe and especially Asia. And then third, alongside of all of this, the Federal Reserve is moving towards tightening. We think that they'll do a faster tapering, earlier rate hikes than we previously had thought. All of those things are supporting the dollar. We think probably more upside risk over the near term.
Still, Zach, people are trying to come to grips with, the full extent of this virus. It will take about 1 to 2 weeks. A lot of things could change during that time. If we actually get a more severe assessment of this particular virus, could the Fed change its tone when it comes to tapering?
Possibly, although I would be hesitant to take that too far. We would really need to see significant downside effects on the U.S. economy specifically, and a feeling that inflation could be brought under control as well. These outbreaks have mixed effects. On the one hand, they weaken demand in the economy, but they also weaken supply, which can boost inflation because of the disruptions to supply chains, shortages, and the like. The Fed so far has been willing to look through some of these most recent waves, acknowledging that they're having smaller and smaller effects on the economy each time they pass, and they're becoming increasingly concerned about upside risk to inflation. So I think it would take a pretty meaningful hit to the U.S. economy specifically to slow down the Fed. They seem like they are heading towards policy normalization. I think that remains the case even with this news in recent days.
What does that mean for rate hikes, though? Tapering is one thing, but when you look further down the road, in terms of rate hikes, what are you expecting? Have you changed your outlook, or are they pretty much the same?
We have 3 rate hikes next year. That is up from 2 previously. So we do think that as soon as they get done with the tapering process or shortly thereafter, that rate hikes will begin at the June FOMC meeting. It's going to depend, of course, on the inflation outlook. At the moment, it looks like inflation will be relatively high next year. And so our central case forecast is that the Fed won't really have the luxury of waiting. Basically, as soon as they wrap up the tapering, they're going to get on with rate hikes. But it's important to stress that the inflation outlook is very uncertain. It could be higher or lower than we anticipated. And we could see more Fed rate hikes than the 3 we're writing down, or conceivably even an on-hold Fed if inflation comes down more than expected. So, there's not been more inflation uncertainty than we have today in a long time. I think we need to acknowledge that. We think a best guess is 3 rate hikes next year. But, there's uncertainty around that and uncertainty around the path of the dollar as a result.
Okay, so a lot of uncertainty in our Forex markets, but until things are more certain, you think the upside The dollar still remains pretty stable at this point in time. What about EM currencies, in your view? What is your strategy at Goldman Sachs?
For the year as a whole, we generally think that EM currencies have some reasonable opportunities in them. You have a global economic recovery that we think will be geared towards emerging markets over the next year. We saw China recover from COVID first, many developed markets second, and we think the last stage of recovery will be driven by non-China emerging markets. On top of that, many of these currencies are relatively undervalued and offer quite a bit of carry or yield because of the rate hikes that we've been seeing in emerging markets. So we think the total return opportunity is reasonably attractive in EM, although investors are going to need to be pretty selective, as recent days have shown. The Omicron outbreaks have indicated a sort of setback in the reopening in places, certainly in South Africa itself. That spilled over to other tourism, travel-related currencies like the Thai baht. So it's going to be a selective environment, but we think certain emerging market currencies offer decent total returns. We like the Russian ruble and the Mexican peso best at the moment.
Okay, what about the safe haven Japanese yen? I mean, we saw a scurry into that currency on Friday. What's going to happen to the Japanese currency?
So we think the Japanese yen is going to be on the back foot for the time being, or dollar yen generally pressured higher, because the dominant thing happening is the Fed still moving towards tightening. On the concerns about Omicron on Friday, we priced out a significant amount of Fed tightening for 2022. We think as markets settle down in the coming days, we can price some of that back in. Higher U.S. rates generally mean a Japanese yen, a weaker Japanese yen. We think that will be the case over the short term. That being said, if the Omicron concerns damage risk assets, that can be yen positive. And it's important to recognize that the Japanese yen is pretty cheap on a longer term basis. So while we think that there is some downside over the next few months, we wouldn't want to extrapolate that too far. The yen, we think, is already a relatively undervalued currency to begin with.
Great conversation, Zach. Thank you so much for joining me. Zach Pandal is co-head of Global FX Rates and EM Strategy at Goldman Sachs, joining us from New York. Well, coming up after the break, Omicron variant panics some policymakers. The chief scientist of the WHO spoke to our friends on Squawk Box this morning. We'll tell you what Dr. Soumya Swaminathan told us about Omicron when we come back.